India-US trade deal, key impacts on Indian stock market before Trump's tariff deadline. Nifty 50 prediction, India-US trade deal impact and July 7 trading strategy. India-US trade deal, key impacts on Indian stock market before Trump's tariff deadline. The looming deadline for the India-US trade deal has left global investors, including those in India, holding their breath as they await the outcome. As the July 9 deadline for President Trump's 90-day tariff pause deadline rapidly approaches, the Indian stock market has entered a period of consolidation, with investors adopting a cautious stance. The market has seen a 0.7% decline over the week, reflecting the uncertainty surrounding the negotiations. This hesitation is not unique to India. Investors worldwide are adopting a wait-and-see approach, highlighting the global implications of this trade deal. Commerce Minister Piyush Goyal has boldly declared that India will not bow to pressure in trade talks, insisting that any deal must be fully finalized, properly concluded, and in the national interest. This stance raises questions about the future of the negotiations and whether the two countries can reach a mutually beneficial agreement. As the deadline for the tariff suspension looms, an official PTI report reveals that the Indian delegation has returned from Washington after holding talks with the US on an interim trade pact. However, discussions are ongoing, as certain issues in the agriculture and auto sectors remain unresolved. India's concerns over the 25% duty in the auto sector and the 50% duty on steel and aluminium goods highlight the complexities of the negotiations. Despite the challenges, there are reasons for optimism. According to Sujan Hajra, chief economist and executive director at Anand Ruddy Group, the temporary pause on tariffs and the constructive dialogue between the two nations have boosted confidence in a resolution before the deadline. Hajra explains that a favorable trade deal could significantly benefit India's export sectors, particularly IT, pharmaceuticals, and auto components. This could lead to increased foreign investor interest in Indian equities. While some experts are optimistic about the potential benefits of a trade deal, Harshal Dasani, business head at Iron Vasat PMS, cautions that challenges remain in the agriculture and dairy sectors, which could be negatively impacted by existing tariff structures. This raises questions about the overall impact of the deal on India's economy and whether it will be a win-win for all sectors. As the deadline approaches, the question remains, what will be the true impact of the India-US trade deal on the Indian market? Will it boost foreign investor confidence and strengthen the Indian rupee, or will it lead to short-term market volatility and uncertainty? Share your thoughts and predictions in the comments below. A positive trade deal could have far-reaching consequences, including increased foreign direct investment, FDI, inflows, which saw a 14% increase in FY 2024-25. This could position India as a more attractive investment destination, particularly in the services sector. However, as Nitin Jain, senior research analyst at Bonanza, advises, investors should exercise caution and consider defensive investments to mitigate potential volatility. Disclaimer: this article is for educational purposes only. The views and recommendations expressed are those of individual analysts and broking companies and do not reflect the views of Mint. Investors are advised to consult with certified experts before making any investment decisions. Nifty 50 prediction, India-US trade deal impact and July 7 trading strategy. Brace yourself for a rollercoaster ride in the Indian stock market as the Nifty 50 index hangs in the balance, heavily influenced by the looming deadline for the India-US trade deal. With analysts predicting a potential surge to 25,700 in the coming week and 26,200 over the next 2 weeks, the immediate support level is set at 25,300. After a 2-day slump, the benchmark Nifty 50 index made a remarkable comeback on Friday, recovering from its intraday low to close near the day's high. The index ended the day up 56 points at 25,461, despite a weekly decline of 0.69%. The recovery was led by Bajaj Finance, Dr. Reddy's, and Infosys, while Trent, Tata Steel, and Ico Motors faced selling pressure. Both the Nifty mid-cap and small-cap indices also bounced back strongly in the second half, ending the session broadly flat. Sector-wise, all indices closed in the green except for Nifty Auto and Metal, with Nifty Oil and Gas, Realty, Pharma, and IT seeing the most buying interest. But here's where it gets controversial. Despite the rebound, both domestic and foreign institutional investors were net sellers in the cash market on Friday. This raises questions about the sustainability of the recovery and the overall market sentiment. Looking ahead, market participants will be keeping a close eye on two key events on July 9, the outcome of the U.S. trade deadline and the release of the Federal Reserve's FOMC minutes. Both of these events could have a significant impact on global market sentiment. According to Nagaraj Shetty of HDFC Securities, the Nifty has formed a reasonable negative candle on the weekly chart after last week's breakout above the broader range of 24,500 to 25,200. This places the index at a crucial support zone, based on the principle of polarity, where prior resistance turns into support. Shetty expects the next upside targets at 25,700 in the coming week and 26,200 over the next 2 weeks, with immediate support at 25,300. Rupak of LKP Securities also identified 25,300 as the key support level. As long as the index holds above it, bullish sentiment is likely to persist. On the upside, the Nifty could move towards 25,800 to 26,100, with immediate resistance at 25,500. A breakout above that level could accelerate upward momentum. Nandish Shah of HDFC Securities noted that the index has formed a bullish hammer candlestick pattern on the daily chart after finding support on the upward-sloping trendline connecting recent swing highs. This suggests that the recent pullback may be over, and the uptrend could resume. Shah said Friday's low of 25,331 now acts as strong support, while the 25,600 to 25,670 zone may offer near-term resistance. But what do you think? Will the Nifty continue its upward trajectory, or will the US trade deadline and FOMC minutes throw a spanner in the works? Share your thoughts in the comments below.